Welcome to the Tech Guys Who Invest podcast, where each week you will learn how to invest wisely and safely. On this show, you'll hear about lessons Adam and Kevin are learning on their investor journey, as well as insights from industry experts. Our vision is to educate, entertain, and bring tons of value to you. Welcome to our show.
Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where each week you learn how to invest wisely and safely. One of the most common questions that Adam and I receive is all about how to invest with little money, or it will be asked, how much money do I need to invest in real estate? And the answer is going to vary, but with the maximum contribution of $6,000 per year for a self-directed IRA, there are a number of different options that you can do. In fact, you can contribute up until the next year, whatever the tax day may be. So for example, if you're listening to this today on May 17th, I believe the deadline to submit your taxes was today. That being said, you can contribute whatever amount of money you can to your IRA up to the maximum amount up to this day. So the same day the taxes are due. And traditionally, it was April 15th. So 2020, for example, you can contribute from January 2019 all the way to April 2020 for your contribution for your self-directed IRA. And some people may say, well, $6,000 isn't really a lot of money. And that might be the case, but there are some strategies that you can do, some things that you can do as an investor to grow that nest egg so that you can take down bigger deals, so that you can participate in a syndication, if you will, if that is one of your goals. And this is what we talk about this episode. And if you have any questions about how to get this done, because I've done it in my self-directed IRA, and Adam has worked with people that do it with their self-directed IRA as well, feel free to reach out to us, techguyswhoinvest@gmail.com. And if you like the Tech Guys Who Invest podcast, please leave us a review on Apple Podcasts. Let us know how we're doing. We'd absolutely love that. So without further ado, here's this week's episode.
Hello, everybody. Welcome to another episode of the Tech Guys Who Invest, where we help you invest wisely and safely. Today, we'd like to talk to you about the topic of what if you only have a little money to put into some kind of a self-directed or some type of a retirement account? What do you do with that money? Because we talk a lot about putting money into a self-directed IRA so you can invest that in real estate, but there's a minimum amount of money you would need in there to make an investment in real estate. What can you do if you only have a few $1,000s, like $5,000 or $6,000?
Yeah, so with that, with $5,000 to $6,000, first of all, a couple of things. If you're listening to this in 2021, the contribution deadline is May 2021. It's normally April 15th when taxes are due is when you can stop. So let's say you started contributing into your self-directed IRA in September of 2020. That would mean you have until May 2021 to contribute this $6,000, which is the maximum. And $6,000 doesn't seem like a lot, and that's totally fair. What you also can do, and then we'll go back to investing with little money, but another way you can do to grow that fund or increase that lump sum of money is you can take money from your 401k and roll it over. If your company offers, let's say, an active withdrawal is what it's technically called, or if you were to get a new job, for example, and you have money in that 401k, you could roll that over into your self-directed IRA, and that limit doesn't, it wouldn't be considered hitting that limit. So let's say hypothetically you had $50,000 in your 401k, you got a new job, or they let you do an active withdrawal, you can take that money out, and now you have $56,000 in your self-directed IRA. So that's one way to add more money to it. But what happens if you? Sorry, go ahead, Adam.
Yeah, I was going to say, that's great. I mean, that's a great tip. If you've got that money, that is one way to be able to put it to work for you the way you want to. And a situation like I had with my daughters, maybe you have a kid who you want to get a Roth started for, or you want to do some kind of a college fund, that kind of thing, right? If you're just getting started and it's the very first time you're going to open this account, the maximum you can contribute in that first year is $6,000. So what do you do with that? You don't really want to open a self-directed IRA account and pay the fees associated with a self-directed account only to take your $6,000 and only be able to invest in like some kind of mutual fund or index fund, right? It just wouldn't really make sense. So some advice I got which I thought was pretty good advice, is take that and do it in a low cost account, like a Vanguard account, for example, and get a real low cost index fund of some sort and invest it there and let it grow. And it'll grow there with lower fees. And eventually you'll get it to a point where it is at a size you could invest in something like a real estate deal with. And then you just roll it over into the self-directed account at that time. And now you can invest in real estate.
There you go. That's one way to do it. And if, let's say, hypothetically, you have $6,000, you've maxed it out, that's all you could put in. That's fantastic. You could, in theory, then create a note around $5,000. I don't recommend all $6,000 because, like you said, fees, and there's just going to be administrative stuff you may have to pay for, like contracts with your from your attorney to make sure that they read it over. And if you are investing with a self-directed IRA, the expenses of the deal have to be paid for by your self-directed IRA. So just keep that in mind. You can't cross the funds of, oh, I'm going to pay for the lawyer fees with my checking account if the deal's for your self-directed IRA. They won't. It's not really a good thing to do because you could lose all your money effectively. But yeah, you could issue a $5,000 note to somebody, to an investor. I can promise you investors are always looking for money. Now, if you're going to do that, I, of course, recommend it be secured. And the reason I say secured is because what's stopping the investor from running away if it's unsecured? Who cares if the note is 20%? The investor could say, oh, well, I didn't. Oh, well, bye-bye. And then you'd have to figure out a way to pay for those to sue them, right? So it's kind of it's not my cup of tea. It's not my risk tolerance, but if it's yours, take the risk and you're comfortable with it. As long as you do your research, then hey, what more can I say? But you can issue notes and secure it with anything in your self-directed IRA, except things that are collectibles like trading cards or insurance policies is another thing. So anything that derives its value from subjectivity, art, rare baseball cards, you can't really invest in with your self-directed IRA. But let's say the investor has equity in their rental property. You could take a second position where you are that second position on their mortgage, right? They're basically taking out a mortgage and you're the second lien on that property. So there's a lot of ways that you can do. There's a lot of creativity that you can do as far as a note investor. And I've even heard of people securing a loan with jet skis or cattle. I secured one of my loans by 2 work trucks. So it's all possible to do that. And you can grow it, like 8%, 10%, whatever works. The beauty of being that lender is you can set those terms with that investor. And it's secured by something. So that's one way that I'd recommend doing it. I'm hard pressed to think that you could buy a rental with $5,000. I would kind of be worried if you bought a rental for $5,000.
Yeah, that is going to be difficult, especially with the prices of real estate nowadays. But we just wanted to share a few of those ideas with you in case you run across this and you're trying to figure out ways to grow your nest egg and invest and build wealth for the future. So hope that was helpful. And if you have any questions or other ideas that you'd like to share with us about what you might do with that money, we would love to hear it. You can reach out to us at techguyswhoinvest@gmail.com.
One more idea before we close. I just thought of this now as we were finishing up. Let's say you have $5,000, but you can also partner up with other self-directed IRA members to pitch into a bigger deal together. So that's another opportunity. You're leveraging your network as opposed to just leveraging the true capital that you have. So just another idea. And I can promise you that there are investors out there that are looking to make their money move that are in the same shoes as you. So just keep that in mind, keep networking, go to the, self-directed IRA webinars, or when it's safe, go in person, meet up with people. There's opportunity out there. You got to be willing to put yourself out there to make that money work. And when you get that money working, it's going to outwork you. So you don't have to work anymore. So like Adam said, reach out to us if you have any ideas, have any questions. We're happy to help out. techguyswhoinvest@gmail.com. Thanks, everybody.
Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Don't forget to leave us a review on Apple Podcasts. The feedback helps us grow and helps us give you the best investing content out there. For a step-by-step guide on how to leave a review, head over to tgwipodcast.com/review. And lastly, we'd love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com.